CrashGPT, the new AI that's designed to crash the stock market. And I'm just joking about NVIDIA. So the semiconductor stocks in general like to be very cyclical with the shorter term money flows, and NVIDIA has been leading the NASDAQ, leading the semiconductor charge. So I just wanted to take another look at NASDAQ, like the NASDAQ versus the S&P and NVIDIA. So NVIDIA is at, it's not really a major resistance point. It's just making sort of an exhaustion move and clearly just ran into some resistance here. But I wanted to check out this NASDAQ versus S&P chart I pointed out a couple times recently, but it very clearly has rejected out of here. So if you go back, this is like a 15-year trend, bubble trend of the NASDAQ, way outperforming the S&P. And just last year, it broke the bubble trend, and now this year it has ripped up with our like mini bull run. It's back tested the trend and rejected pretty hard. And so yeah, not financial advice, of course, as always, but if just the NASDAQ versus the S&P comes back to a long-term trend down here, well, that's not great for NASDAQ stocks, especially NVIDIA. And so that's kind of just what I wanted to say on the AI and NVIDIA front. And oh yeah, this is Brian Lewis with MMT Investing, your spiritual guide to NASDAQ dominance. I want to take a look at what I don't even remember. The EuroDollar futures, of course. We got to go take a look at the EuroDollar futures because I'm trying to figure out what exact day the market's going to crash. And the down moves in the market, this is the COVID crash, but the down moves, this is the interest rate cycle, and this is the worldwide dollars. So you can see the actual inflation and money flows across the world looking at this chart. And you can see where the interest rate cycle is going to go. So right now, I mean, the Fed just follows this chart up and keeps hiking, keeps hiking. The Fed's right about here now. They have room to hike again. If it stays where it is, they have room to hike again, maybe even by 50 basis points if they wanted. But I don't think it's going to stay up here. Let me zoom in on this, and I'll show where we are in the cycle. Because the last hike that was attempted caused all of the banking collapses, and we have this huge volatile, this is the most volatility we've ever had in the interest rates in the bond markets. And we've got this really, really dangerous looking, bearish, it's just a bear flag. And I was wondering if it was going to break out of here now, but it looks like it's threatening to do it tomorrow. We have the bank earnings, some of the bank earnings coming in tomorrow. But if we break this bear flag, and break the sort of the topping area, we've had this topping area for months, but if we break the bear flag and break out of this topping area, and we make a big down move, and this is an incredibly steep hiking cycle. I mean, we're making like gap moves on the way up, which is very rare. Gap moves on the way down are extremely common. Like that happens pretty much every cycle. But if we make a big gap move to the downside, that's going to be a deflationary move. It's a huge monetary contraction. Probably will coincide with more banks failing. And that will be that'll be the beginning of the recession. When that happens, it'll be the first down move in the bear market. The moves that we've had so far is not a bear market. The bear market happens on the backside of the credit cycle. And we'll have to figure out what it looks like. So, I mean, if the credit cycle comes all the way back down to zero, if we come all the way back down to zero here, this is going to be a huge crash, bigger than the financial crisis, because this is a steeper and more ridiculous, just more ridiculous cycle than what happened back then. And plus, the volatility is just much higher. But it's not guaranteed that we're going to come like all the way back down to zero. Like a lot of people are estimating that interest rates bottom at 2% or whatever this time. So we'll have to just try to figure the backside of this thing out. So those are the two big things, is like, when is it going to come down? And it already has started to come down. Like this is the first move down right here. We had a failed interest rate hike here, boom, and this is our first down move, and this is a bear flag. And so we should be on our way down now. But if it's like really gradual and drags out, there'll be a super mild bear market. And if it makes vertical ripping moves to the downside, that'll be a super aggressive bear market with big crashes in it, like the financial crisis. Let's take a look at the S&P. So the S&P is just coiling right here, near resistance. We have a down channel set up, and you can see this same down channel on the NASDAQ, except that on this chart, you can see that sort of double top here, which is confirmed by momentum, which is not that huge of a deal. But if you go look at the NASDAQ, which is here, it's not a double top, and the NASDAQ actually made a double bottom here where the S&P didn't, and the S&P made a double top here where the NASDAQ did not. But this is the same channel that both charts are in, but on this chart we have a divergence. So the NASDAQ is looking much weaker than the S&P in pretty much every way right now. And then you have the big stocks, the FANG stocks, which I think NVIDIA should just about be considered a FANG stock at this point instead of Netflix. But yeah, that looks super, super dangerous. The NASDAQ looks like it's in a dangerous spot. And that was my AI joke about ChatGPT. I was just taking another look at NVIDIA. And what day? Like, what day will this happen, right? So we got to zoom back in on this. Flag, because we're running out of room. And we're pressing on the bottom again. So if we take a look at this bear flag, I mean, how many days left? That's like Friday, Monday, Tuesday. Like, you don't ever get to the very peak of a flag like that, assuming that it does break out to the downside. I think Monday is the last day before we gotta like re-look at the technicals. But in terms of in terms of the fundamentals, I mean, everything is going on. Like, the Fed has already said the word recession, like not admitted that it started yet. Every single recession indicator there is, except for the unemployment rate, is already flashing red. The unemployment rate is a lagging indicator that goes up after you've started a recession. So like all of the recession signals are already in. But the bear market signals are not in yet. We have the yield curve is inverted right now. So yeah, I mean, tomorrow or Monday is the day when we break out of this pattern and see where it goes. I mean, technically, you can break out to the upside or just invalidate this thing to the side. Sideways move would be bullish. Up is slightly bearish. Down is very bearish. Like, those are the spots you can go from here. Or at the top of the cycle, just like hanging on the edge of a cliff. But if you go look at the at the yield curve inversion, we have a similar flag, and the depth and width of this thing, I mean, this is almost a year-long inversion so far, and it's hugely deep. This is one of the deepest yield curve inversions that we've ever had as well. And so that just indicates sort of the length and the size of the recession. So they're coming out and being like, yeah, we'll have a recession, but it's going to be a super mild recession, like no big deal. But no, this is going to be a big-time recession. In terms of just the recession, you can just see it in the yield curve inversion. But the recession doesn't start until you go steep on the yield curve. And then it's hard to, like, when they'll officially call it a recession is hard to predict. But like, it's usually sometime around crossing this, and then they'll just say it's a recession at some point as the yield curve goes back steep. But that's not guaranteed to happen right now. Like, you can go bullish for a very long time before it goes steep again. I just think that's highly unlikely now that we've had the reversal in the interest rate cycle, and we've had the bank collapses. Like, that's saying it's going to happen pretty soon. And then just the technicals, it looks like it's going to happen like this week or Monday. Yeah, so that's where we are. That's where we are in general. But like the dollar has not started going strong on the technicals. Like that hasn't happened yet, and the unemployment rate has not happened yet. The VIX is still pressing down and coiling. Like that hasn't broken out yet. Like these are all things that will happen when the move starts. And those are all just sitting and coiling. And I mean, you can see the chart as well. I mean, like the S&P is just sitting and coiling. You know, all the charts are hanging out. Bitcoin is on a different resistance pattern. It's just doing like a rising wedge right now, which is probably more bearish than like the S&P just coiling at resistance. Like this is a very, very bearish pattern. And then you can see on like Bitcoin, same kind of thing. You get multiple divergences. Yeah, this has like multiple divergences and a rising wedge inside of a bear flag, inside of a downtrend. I'll have to look at Bitcoin again and do a whole video on this, but yeah, this is a huge risk asset that's also a leading kind of risk asset in this bubble, along with just like the bigger kind of meme stocks and stuff like that. So yeah, it hasn't happened yet, and I think I want to call Monday now after doing this is because it's just the most dramatic thing that could happen is wait till Monday. But also if like the next contraction starts over the weekend, that doesn't allow anyone to place weekly options. Like you let the sentiment and the money reverse, where the big money is going hugely short right now, and it's building a short position. So they need time to build a short position, and then the dumb money, the fast money, is going into this consolidation like it's bullish. So you need the big money needs time to position, but also just on the options chain, the stock market does not like to make big moves if there's a pile of options sitting there. And so if the thing happens over the weekend, there's no way to place options. And like if a big down move happens early on Monday, there's not enough time for people to place options. So you could get, I just think that would be like, it would be like Bloody Monday. Yeah, that would be super dramatic, and everyone would be upside down because the smart money has had time to accumulate a short position and sell a bunch of stuff, and that takes a little bit of time. That's why you consolidate like this, is because the money is changing hands. Well, not necessarily on the interest rate chart, but on the other charts where it's consolidating. Like that's what these consolidation points are, is the money is switching hands, but it's hard to see like which way it's switching. Yeah, so anyway, that is the general idea of where we are in the cycle. I don't know what else is going on. I think most things are just kind of sitting and waiting right now. Like Tesla is looking kind of droopy. If you look at banks like Ally or something like that, they have the same coiling pattern as the interest rate market and the same like down move bear flag kind of thing, which is pretty interesting. I should do a quick series on which banks are going to fail next. I think I'll do a bunch of shorts. Because that's about to start happening again. You have like Warren Buffett coming out saying banks are going to fail, but it's fine. Your money's completely fine. It doesn't matter if the banks fail. There's no risk here. Like, what are you talking about? Like, not even mentioning like bail-ins or something, as though the FDIC has any way to do anything. They don't have money. The only way they can insure or bail out your deposits are if the government and the Fed decide to do that. And they don't even need to bail out anything. Like they can bail in. Bail in means they just take your money and keep it. Like that is legally on the books, an option that they can do. And they've done it in Europe, like in the last crisis. Like they did that in Greece. They just bail in, they just take your money. Like, oh, it's a bail in. So like even way beyond like the FDIC just failing to meet obligations or something like that. Or the FDIC limit about what they'll insure. Like there's no there's no actual money there. They're just saying they're going to do that, but they're legally allowed to bail in and just take everything. So I think there's a little more risk than Warren Buffett was mentioning to the average person that has any money in any bank account. But yeah, this is the short list of banks that I'm looking at. Toronto Dominion, like Canada, has an additional problem. I'll go into the banking situation, but you have like commercial real estate like piling on top of everything else that's already going wrong. Like all the banks are upside down on their treasuries because we're at the top of this interest rate cycle, and they can't. Everyone's taking their money out of the banks, and they can't do anything. Like they can't pay people. So the Fed opened a short-term lending facility where the banks can lend money to pay people that are taking their money out, which is like okay, but then the banks are sitting upside down on the Fed loan also, and people aren't putting their money back in. Like, when is that going to happen? People are taking their money out and putting it in like money markets and stuff like that. Like, they're not moving it back there. So the banks are going to hold treasuries upside down and hold these Fed loans upside down, and then are going to have a wave of housing and commercial real estate is a huge one. They're going to be absolutely upside down on everything with no way to do anything. I mean, the banks are just going to have to get. It's going to be really interesting. I mean, I think a lot of banks, yeah, a lot of banks could fail in this cycle. A lot. It could get really nasty. Oil. Yeah, so oil and gold and silver have been bulling. Oil is getting like a false bullish move because they just cut supply. And I've heard like ideas that they're going to try to cut America out of the whole oil system altogether, which is like a economic kind of war thing. But U.S. has a ton of energy on its own. That'll just be, yeah, it'll just be like a counterattack to the U.S. like doing a bunch of sanctions and like confiscating Russia's like dollar assets. Like everyone's terrified of that. Like the U.S. has lost all credibility for dollars being like safe because they'll just confiscate your dollar assets if they decide to, like they did with Russia. Like that is a really, really bold and a really, really bad move. Nobody in the world is going to trust dollar assets after that move. Gold and silver bulling right now. But the thing about these things is like they're bulling right now at the top of this cycle. And again, like this could stay bullish for stocks, and gold and silver could all bull if we hang out at the top of the cycle. It's usually volatile and there's a little bullishness. But as soon as we start the down move, this is the recession and the crash. The down moves on the backside of the cycle is where the recession and the crash happens in every cycle. So we're just hanging on the edge of it. All right, so that's the stuff. That's the stuff for this video. I need to get into banks. Get into some banks, and happy trading.